Hello, everyone, and welcome to the Academy. This is hopefully the first in many conversations that we're going to put up on the Academy, conversations that I have. My name's Harry. I'm joined by Nick, the founder of the Academy. And this is something that we go through on a regular basis. We have daily conversations about various different ideas. Just a brief bit about my background. I was a market maker, trader. I'm now in the sphere of teaching, so I am a teacher, a tutor, a coach for the Academy, and very much seriously involved in, of course, investing from my own perspective. So I come up with trade ideas. I then run them through with Nick. Nick normally rubbishes them, tells me ideas or the reason why I shouldn't take on that idea. But this is a conversation again that we formulate together, and it can go on for half an hour. We're going to keep this very brief. I just wanted to talk about something that's been asked of me an awful lot. It's about crypto. Now, cryptocurrencies. Now, I'm no expert. I profess to be no expert here on cryptos. I'm not too sure Nick would actually put his hand up and say he was a perfect expert on this. But we were talking about this because this was a conversation that was coming up many, many times, and not from people involved in the sphere of finance. No, indeed, most of the questions were coming from people outside of the world of finance. And it just seemed to be a recurring theme that's been running over the last, say, month. So I thought we'd get together, I thought we'd record this and just air some views, and maybe that will help you in your decisions, or maybe certainly this isn't about advice. We're not giving advice on this. It's just to give you ideas, or perhaps answers to some of your questions. Okay. So once again, I'm joined by Nick, the founder of the Academy. Nick, if you want to do a brief introduction.
Yeah, indeed. As you say, firstly, this is educational and entertainment purposes only. We're not here to give advice. We're trying to show you how we look at things, or how I look at things, how Harry looks at things, and how we come to some ideas together. I mean, my background is I also started in trading in the mid 80s, and in the late 80s, I think that's when Harry and I started to work together. So it really was a long time ago. So we've known each other an awful long time. And after I stopped trading, I moved into venture capital. I moved into mezzanine debt. And then I ran a branch of a German bank in London. And in 2015, I became chief investment officer of an asset manager in Germany. And in 2019, I started to do my own thing. And the Academy is one of the things that I do. And I'm really happy that Harry's part of the show, as it were. So, what are we talking about today? As Harry said, that this XRP has been it's not just something he's come up with out of the blue. He's been asked by a number of people. I've been asked by an incredible number of people about XRP. What do you think? Should I buy it? Should I sell it? And all of this stuff. Some people have been engaged in this thing for many years, and some of them are kind of still new to it. So even though this isn't really the kind of thing on a daily basis that Harry and I talk about, and we do talk daily, we thought we would make this the inaugural video for the Academy. We hope to do this on a regular basis. We hope to have something up there at least weekly, talking about one particular thing that we that's on the agenda. You won't hear all of the discussions; they'll be far too boring. But yeah, I mean, let's get into XRP. What's the deal, Harry?
Well, again, thanks for the lovely introduction there. You say obviously when we first got together, reminds me I must have been about 12 at the time. But we'll move on from that. That we won't dwell on that. So yeah, as Nick's mentioned, obviously these are conversations we have. We just thought we'd switch the camera on this one. Thought it'd be interesting because of all of these questions. So yeah, it's about crypto, and in particular, the conversation's been about Ripple, XRP, whatever you want to call it. So I just wanted to get some ideas on it. There's loads of stories, loads of things in the press. I think today there was an article about the case that's been going on. We're not going to get too legal on this, but a case that's been going on, been rumbling on for a little while between the SEC, that's the regulator in obviously the US, and Ripple Labs. And they tell us, or we're told to expect maybe settlement is close. Now we've seen some recent price adjustments in obviously Ripple, and you kind of think, well, these rumors kind of do they have any grounding? Do they have any real basis here? Now again, remember this isn't about advice. This is just about answering the questions that get asked of us. We're going to do some price analysis as we always do. We look at the charts. We're not going to say, oh, this is definitely going to happen. We're trying to create some kind of roadmap. So, the questions I'm being asked regularly now are, okay, so we've heard about this. We've heard about this crypto. Crypto's been around for a while. Ripple in particular, saying, where do we go next? I've had people saying to me, like, if I haven't got in now, because all my friends have got in, have I missed the boat? I mean, we've seen a big leap up in price in the last couple of weeks. If they are in, the question is, should I perhaps take profit now because it's gone up to a nice high level? I mean, we're practically at highs that we haven't seen for a little while at the moment. Is it now time to take a quick profit and then wait for the market to dip down and buy the dip? Again, these aren't questions that I particularly have the answer to. So again, I'm calling in Nick here just to have a discussion on this. Where's the path forward? So I think the low of XRP, and a few people have been boasting to me they got in at low is about 2017. I just want to think about, where are we going from here? Is there any kind of guidance or view that we can gain from, of course, the price analysis that Nick and I do on a regular basis? So I'm going to throw it over to you, Nick, and tell us what you think.
Well, I mean, for the record, I'm not involved in XRP, and I haven't been involved in XRP. And obviously, this SEC case has kind of put a lot of people off, And my view on that thing is these things get sorted out one way or the other. And yesterday, Trump signed something Trump signed into law, I think, something which is going to create a working group to study crypto, to develop a portfolio of crypto for the US before the inauguration, before actually the election. He was rumored, or it was clear that someone had said that he was going to be putting 1 million Bitcoin on the books, own 5% of Bitcoin in the same way they pretty much own 5% of the gold market. So I think what that did for every asset in the crypto world, and XRP included, was be the catalyst for the next stage, if you like, of what goes on with crypto. I think one of the things that have held back the crypto market is this whole uncertainty under the former SEC leadership of Gary Gensler, who was a teacher in blockchain at one of the top universities in America. But when he was given the big job, he decided to make life difficult, I think, for the world of crypto. But as they say, there's a new sheriff in town now, and the sheriff seems to like crypto, and therefore people are beginning to sort of look at what is possible for all of these not just Bitcoin, obviously, but also some of these altcoins. And probably, the reason that Ripple has been asked so much is that it's one of the largest, it's, I think, the third largest crypto by market capitalization. And it's certainly been the one that has moved up the most. So maybe I'll just quickly share a screen to put it into context here. Right. So here's a chart of the history of Ripple since the beginning. And I think the SEC ruling on Ripple was sometime around here, almost at the low. So I don't really see it as something that has either caused the prices to go up or prices to go down. It's not really a catalyst for Ripple per se, but it probably was a catalyst for the whole crypto industry to be looking over its shoulder at the time when, watch out, there's Gary Gensler around, who's he going after next? So this uncertainty over crypto is a very important thing, because it's either going to prevent crypto from developing or it's going to allow crypto to develop. So to give you a clue of just how important it is, so you've got this whole period here where nothing has happened on Ripple, or on the altcoin market, yeah. But around here, so this is November the 6th. That's the there's a new president. Things changed again. So the market was effectively, I mean, this is a good chart for kind of understanding a little bit of Elliott Wave, but it kind of looked like, or the way that price action was behaving, at least on Ripple, that it kind of looked like there was some kind of sideways action, which you could argue is a triangle. Triangle kind of waits for, gets the ranges get narrower, and then we get some kind of catalyst which determines what the blast off up or down after that. Of course, the new administration which came in here on the chart, led to well, I would say led to a change in the perception of crypto, and say it's the relief valve, because if you've got a crypto-friendly government, then obviously business is going to be made a lot easier for a lot of these coins. And more importantly, it's not about the coins themselves. This is about how institutional investors are going to interact with these instruments. They suddenly are either going to have more meaning, because up until now there's a lot of talk of the better fool. You're just waiting for a higher price, you can lob it out to somebody who's going to buy it, and so on and so forth. But I think once crypto gets the seal of approval of a sovereign nation, I mean, it's already had the seal of approval from El Salvador, but if the US give it a stamp of approval and it says, we're actually going to put some of this stuff on our books, number one. And number two, we're going to clarify legislation on crypto, and they want to make the US a crypto-friendly place. Well, what was the first reaction from some of the banks? So banks have always been involved in this, in the blockchain world. But the Bank of America CEO, Moynihan, basically said, if crypto legislation comes through, then we will certainly be looking at allowing payments in crypto. And that changes the whole world, because a lot of the criticism is, well, what can I buy with Bitcoin or ADA or Ripple or whatever else? Because, people were frightened off from using these things. But now when you get a change in legislation, then that kind of changes the nature of crypto. So now we're looking at a different world, in my view, where we've moved out of this sort of crypto was established. There was a lot of emotion, up and down, lots of FUD, so fear, uncertainty, and doubt pushed around. But now we expect tailwind, if you like, on supportive legislation, and very importantly, institutional investors getting involved. And institutional investors don't just sort of put 20 quid in the market. I mean, these people, if they get involved, will get involved in size. Now, we don't know to what extent they're going to be owners of crypto, whether they're going to be facilitators of crypto. But one thing's for sure, crypto is going to be playing a much, much bigger role. So what do we look at this? What do you see in this chart? Is the old high. I mean, if this price series is correct, in 2017, January the 1st, December the 31st, 17, January the 1st, 2018 was the high. And lo and behold, I mean, that's pretty much where we are right now. I'm sure some different exchanges might have that slightly higher, slightly lower. But we are pretty much at the high from that time in 2017, which was never seen again. until, very recently, until, we've had this sort of move higher. So, for sure, this is, not necessarily something that you can just say, oh, we're back to the old level, whoopee-doo. You can imagine that there's a reason for some pause, waiting for, again, new money to come in, because it may well be that those people who are involved at the top, don't know how many people that was, are suddenly saying, well, I've never seen these prices since that time. People who got in up here where I've got this B, people who are sort of been buying up here, finally at break even. And so it may provide some kind of resistance. And so we have to look a little bit deeper into price action from here.
Can I just
Harry.
jump in here, Nick?
Absolutely.
Yeah, so again, this is directed towards people that don't really come from a financial background. So I don't want to leave anyone behind here. And we'll see, we're going to start talking a little bit more technically in a few moments. We'll try and keep it as basic as possible. Again, if you understand this stuff, you'll be fine with it. But I just want to make sure everyone's carried along at the same time. We're looking at here Ripple versus the dollar. A lot of my contacts have been talking about Ripple versus sterling. It's a simple case. Just do the FX exchange rate on that, and you'll be pretty much in the right ballpark, or you should be. Otherwise, there's some kind of inefficiency in the market. So don't worry about it. Even though we're talking about dollars, you can easily translate this into obviously XRP versus sterling. All right, and we'll kind of cross that barrier when we need to. So we're talking here of we're studying price action. All right, we're looking at price action here. Nick's already mentioned that we're up to these highs again, and just think about it almost as psychology here. You perhaps, if you were buying right back there in 2017, 2018, let's say you bought at that very high point on that graph, and you've seen from there on in the market has drifted lower, lower, and lower, and lower, and lower. Back in 2021, it kind of goes back up, and you're hoping and praying that you're going to get on side, because at the moment you're still underwater if you bought back there in 2017 at that peak. At that peak, let me be quite precise. If you were just before that, then lovely entry level there. But you've got in at that high. You've approached it almost in 2021. We're now back up to that high. It wouldn't be beyond reason to see people suddenly with relief going, oh, get me out of town. Get me out of town. I've been underwater for all this time. What are we talking? 6, 7 years, 8 years almost. You've suddenly got up to that point where you bought and you think, let me get out of Dodge. And that's the point where, of course, we talk about this thing called resistance. So you could start to see people coming in here and thinking enough's enough. Or, as one of my earlier questions alluded to, it could be that point where people think, well, there is going to be a bit of stickiness here. Could this be the point where I would sell out and look for an opportunity to get back in at a lower level? We call this buying the dip. Now, of course, that's all very well, and this is the kind of series of questions I get asked. All very well to think that, but you've got to think about your time horizon. You've really got to think about your time horizon in terms of how long are you intending to be invested or involved in XRP? Because if you're thinking I'm here for the long term, I'm going to wait for this massive, 10x return on this, then hang with it. You will see movement. You're going to see volatility. You can see it on the chart right here, the ups and the downs. We're trying to look for trends. We're trying to look for a recognizable trend. This is the conversations, again, that I have with Nick regularly. We're looking for trends and to give us some kind of idea of where we're going to go next. Nothing is guaranteed. In this world of finance, in as many parts of the world, many aspects of life, nothing's guaranteed. All right. So we're not saying it's definitely going here, it's definitely going there. We're saying what is likely, what is probable. And right here, you might see that pause. Now, is that pause an opportunity to take profit? Possibly. And then wait for maybe the next dip down to buy it in a better level? Possibly. But if you end up selling it here and it goes even further upwards, then you're going to miss the opportunity. You're going to be out or off the boat, if you will, as it's sailing higher and higher and higher. So Nick's going to start to talk about price action further here. Nick is an expert, I think I can say that, in Elliott Wave. I'm not. I'm really kind of at the early doors of Elliott Wave for me. I have my own indicators, as everyone does. I have my own ways that I like to look at these things, and that's what makes this conversation so good for me and hopefully for Nick as well, because we're looking at different ideas and we're trying to combine these ideas together. But of course, my viewpoint when I'm getting involved in these assets, I tend to be doing it through derivatives. I tend to essentially get involved in options, and I tend to be doing this on a fairly short-term basis. Nick can be extending his view out further and further. So again, make sure that you are suiting how you're going to do things to your time horizon. If you're thinking once again you're going to be in there for the long term, stay with it. Ride out those everyday ups and downs, because there will be in crypto, without a doubt, there is going to be volatility. There is going to be up and down movements in prices. Don't get distracted by that. If you're there for the long term, stay with it. If you're trading it, that's a different aspect. You might think, right, here's the point. I'm going to sell here. When it dips down a little bit lower, hopefully it does, you can get in a more an advantageous level and ride the next wave up. Talking of waves, Elliott Wave, again, I am not an expert. I'm not even close to being an expert. I'm learning, and hopefully some of the listeners on this recording will be learning from this as well. So I'll try and keep Nick down at the basic level in terms of explanations here. Perhaps, Nick, if you're willing, you would just give us a brief idea of what Elliott Wave is all about, and then we can bring in other indicators like Fibonacci levels and moving averages and all the lovely stuff that people tend to discuss. So I'll pass it back to you, Nick. I just wanted to make sure that everyone was still on board. Apologies if you know this stuff already. I've just wasted your time, but hopefully not. Back to you, Nick.
Yeah, so look, you brought some interesting thoughts here about, saying, well, if you're in it for the long term, then stick with it and all of this stuff. And it's plausible, right? But, you could have said that to somebody up here in 2018, and then, they'd have seen $3 and then they've seen 20 cents. Now, and those conversations with investors and speculators and traders and all of this stuff, you really need to understand, where do you sit with this in your portfolio? So, for example, let's just say you have your portfolio, it's 100 of something, and you began life with crypto, could be Bitcoin, could be XRP, could be some other of these, the top 10. You said, I want to invest 10% of my money into crypto. Then after, these ups and downs, suddenly the portfolio has an allocation to crypto for different reasons. The stocks have gone up, but crypto's gone up even more, and gold's gone up, but crypto's gone up even more. And suddenly this 10% is now 30%. So, are you just going to sort of continue to hold this extra allocation in your portfolio without doing anything? And of course, if you did that, let's just say in 2021, for the sake of argument, April 2021, you did nothing. You saw a price go up, you bought here sort of in the lows at the A, and then suddenly you found yourself up here near the B, and then you said, I'm in it for the long term. In it for the long term. I believe in this thing. And it's 30% of your portfolio, let's just say, at that time. And you do nothing. And you're back to it being probably a much smaller part of your portfolio, because crypto for these altcoins perhaps hasn't gone up as much at that time as, let's just say, stocks or gold or anything else. You didn't have Bitcoin, you had altcoins. And so, learning lessons, as it were, is, I always say to people, whatever you do, try and do something near these highs where you have a memory, whether you buy yourself a nice watch, whether you go on a holiday, I don't care what it is, right? You have to have a memory of this thing, because if you don't, then you are going through, holding portfolio from, a period of time up here to the very low, and then you kind of didn't do anything all that time, and crypto is an opportunity cost. because then you weren't buying Nvidia, then you weren't buying Apple, then you weren't buying some other stuff. And so that's why this idea of rebalancing is not a dumb idea. I just say that. It doesn't necessarily mean that now is the time you're going to go and rebalance, but it is something as part of your decision making you need to consider. And what you don't want to find is, for whatever reason, is whatever price chart you're looking at, you've made a ton of money, it was 10%, it's now 30% of your portfolio, and then you say, I do nothing. And then it suddenly goes back to 10%, and you don't have that extra profit to go and look at some other instruments. The crypto is not the be all and end all of the world of investments. It's, in my view, it's going to be an important part of it, but as an important part, you don't necessarily need to bet the farm, as it were. So that's why, perspective. Do I sell? Do I not sell? Do I take profit with some of my, people say, oh, if you tell me it's a good idea to take some profit, profits, that some people just think, oh, that's 100% or zero, or zero. I'm either in 100 or I'm not. Take profits on part of it, and I don't suggest that that's the case here. So what I'm going to do is I'm going to just look at prices from this pink arrow, because that's really, that was in July. There was already speculation, that the world of crypto was going to have a more friendly administration. So let's have a look at prices from that point. So I'll change the chart. Hopefully I've got the right chart, this one. Yeah, so here I am, kind of looking at the world of Ripple from that yellow, from that pink little arrow, which was in June of last year. So let's just firstly zoom out, and then I'll zoom in very quickly. What does it show me? And what is, you asked me, what is Elliott Wave? Elliott Wave is try to explain how people behave when they act in a group as opposed to an individual. And the way I like to explain it is like when you see these pigeons on the ground, they're all acting at random, pecking away at the ground, and then suddenly a car door slams, or a boot shuts, or a gun fires, or there's a bang, or whatever it is, and they all fly off. But they all fly off together. And they form these beautiful patterns in this, and so when you're an individual and you're looking at a stock and you say, oh, this is expensive and stuff like this, oh, going to sell it, and then you look at the chart and you say, well, the chart looks good, and the trend line and mode, and suddenly your whole individual perspective changes because of the view of the majority, and that's basically Elliott Wave. It's saying, well, when you do act together in a group, you act in known patterns, and these are the Elliott waves. And so from this low,
that's one of the best ways I've heard anyone describe that kind of theory. I think it's brilliant. It's absolutely brilliant, and it brings it down to kind of a just an obvious thing. We have herd mentality, and yeah. Sorry, let you carry on.
No, that's absolutely right. We have herd mentality, and we're greedy, right? Herd mentality. We're greedy. We have FOMO, we see the price go up. I've got to get in, for people who haven't, I've got to get in because I'm frightened of missing out. Or I was in at the low, it's gone up 10x, I want more. So we're greedy, we have these individual behaviors, these biases. And, we sometimes they're our friends and sometimes they're our enemies. And, you have to kind of think about what that is. And therefore, I tried to use the Elliott Wave at least to make me less biased, because I am biased. So that I let the pattern tell me what do you think is really going on. So here I'm looking for 5 waves. So I've called this part here wave 2. It might be wave B. It doesn't really matter. So I'm looking for a pattern of 5 waves going off from this thing, right? Why am I looking for 5 waves? Because I actually think this is the start of something. And even if it was the end of something, the last wave will always have 5 waves as well. So I'm still looking for 5 waves. So therefore, that how I count it, other people might have different interpretations. So I have these yellow waves, if you see what I mean. And, I have a wave one, I have a wave two, I have a wave three, I have a wave four. And then I'm looking for an ending wave. And that ending wave could be just sort of, the wave five, and then it all come, so we get some kind of bigger correction. Or what I'm counting here is each of these waves have 5 subwaves. So it could well be that the fifth wave, extends and there are individual waves within it and it makes it much higher. But plausible, where we are now, we're 319 in price. So let's zoom out. And just sort of, by the way, certain things that certain rules of Elliott Wave and certain guidelines help you determine where you are in the kind of the roadmap. So I counted this as a wave 4 of this particular wave because everything is a fractal. You can see I'm this wave 4. What do the guidelines say about wave 4s? And the guidelines say, well, if you think you're in a wave 4, then you don't want to see a retracement of wave 4, retracement meaning going the opposite way to the main trend, more than between 23.6% and 38.2% of the third wave. And that's why I have these little markers here and there, because they give me some guidance. And you can see 4 versus 3, it looks like that wave 4 certainly had its low around 23.6%. So it's plausible that it's kind of reached that point. And the other thing is, I think I'm counting here the length of wave 4 in time between wave 3 and wave 4 is the same as the length of time it took wave 1 to wave 2. So wave 2 and wave 4 are both the same length in time, which is, this idea of, having the right look in a chart. So let's just say I get comfortable that's a wave 4. Now I'm looking for a move up. We can talk about end targets another time. So wave 4 is here. So now I'm looking for 5 waves. So we are looking at the green colors here. And so I'm saying here's a wave 1, here's a wave 2. I don't think that was the end of wave 3. So I'm looking for something to finish higher than where we are here. It's wave 3 of that, then a wave 4, and then wave 5 of this thing. We can put where we think targets are plausible for this. It's not the final wave, but this subwave to finish. And on my chart with I've got this thing very roughly at somewhere between 4.5 and 5 in price terms, right? So where are we now? I mean, this behavior here doesn't show me any sense that we are starting this last move up. So there's a cautious thing here to say, well, if you think that this particular pattern here ended at that level, your sub wave 4 in blue here, well, what you want to see now are the start of 5 waves. So 1, 2, and then you've got another 1, 2, and then you've got another 1, 2. And so sooner or later, you want to see a 3. If you keep counting 1, 2s, then most likely that you're probably wrong. And then there's something else going on, that perhaps the correction here is going to be deeper, take a different structure, etc., etc. But, you don't want to see a new low, let's just say, as prices go up. And you don't want to see prices make 3 waves on the way up. You want to see the motive waves are in 5 waves. So you want to see these things in 5 waves develop. At the moment, that's still looking very 3-like here. So I really would want to, if I'm a sort of looking at this chart, I really want to see this thing, suddenly go zoink for whatever reason. Don't care what the catalyst is, and to confirm the pattern. Otherwise, this whole thing is again taking on some kind of sideways correction kind of pattern. So one other thing, I'm going to kind of leave the Elliott Wave at that point, but I will go back to this chart that we had, the very first chart, just to, if I can just make that bigger so you can see. I hope you're seeing this. So, sorry, that one or that one. I think this was the longer term chart. Yes, this was the longer term chart. So what I want to show is that there was a rule that I was taught many years ago, and just something to bear in mind. When prices break a high, which is held for many years. So when gold broke the high of 2011, I think it was, or 12, around that point, and you maintain that. So in other words, you sort of kind of go up, not sort of immediately come back down. If you break this level and hold this level, you go up, you challenge, I think the rule is something like 5% or something above. Anyway, let's just say you get comfortable that it's a proper break and not a forced break, etc. Then the rule of thumb is that prices will double after that. So, for people who see a sustained break above this level, then it would not be unreasonable for those long-term holders to be looking for 620, 640. Still my maths wrong. 640 as a longer term target for this. So that's quite plausible. And the other thing is if this thing was really a triangle, wave C, so A, B, C, ultimately this will be extremely bearish for Ripple eventually. But basically, the rule of thumb is that the length of wave A and the length of wave C will be very similar. So sort of 1 Fibonacci, 1.618 Fibonacci, 0.618 of the length of A past A. There's all sorts of guidelines to target this thing. But if we look at what that might be for, this wave C, if this thing is correct here, then you're looking at closer to 8 as a target. But as I say, what does this look like to me? 1, 2, 3, 4, and I'm looking for wave 5 to come up. And then I'll have another look, and how far wave 5 goes up is something, as I say, once you get into this thing, you then begin to focus on a daily basis or even shorter. Anyway, I'll let you, Harry, ask me some more questions if you have any.
Yeah, I mean, that's amazing stuff, excellent stuff. If you're not really into your technical analysis, and I've heard all kinds of comments where people say it's more like reading tea leaves, trying to guess where you're going to go next and see into the future. It's nothing about that. It's not like that. What we're looking at here is behavior. We're talking once again about psychology, human behavior, and we do tend to follow these kind of cycles, these trends, and it's evident. You can't ignore it. You can see these things, and if you're not looking and you're choosing to ignore these patterns, I mean, Nick's been talking about Elliott Wave. If you're interested, incidentally, on more conversation on Elliott Wave, we will be having further discussions on that on the Academy. We'll be doing that an awful lot. And we'll go into other indicators, etc. How we tend to view our price actions and our conversations. So we will definitely get into that if you're interested. But you can't ignore it. You absolutely can't, because again, I'm without any disrespect, I'm talking about the people that have been asking me questions, and a lot of them are not from a financial background. So what we're introducing here within this conversation may be a little bit beyond them at the moment. Hopefully it won't be for long, but the problem we've got is listening to just the news, listening to just what comes out in the press, these various news stories that we began our conversation about, about talking about, oh, it's doing this because of, I've heard this and it's doing that, all of these things. So if we are just concentrating on that, we're going to miss the bigger picture. As an old colleague of mine, not Nick, an old colleague of mine always used to say, sometimes it's like you're creating a portrait, and sometimes you're so concentrating on the minute detail, just concentrating on painting the eyes, you miss the bigger picture. And that's what you've got to be careful not to do. So a lot of our conversations are about, okay, what do we think is going on? We have our own way of viewing the charts, etc., and often we'll agree, sometimes we'll disagree, but that's the beauty of it, and that's how we can kind of keep ourselves humble, to keep ourselves, in the real world here. So Elliott Wave is something we do carry on, we do discuss a lot in conversations that we'll be having on the Academy, likewise with other sort of indicators that we use. So if your eyes, no disrespect, were glazing over as you're mentioning all these waves, there are rules. There are certain rules that have to be observed, certain rules that have to play out. Otherwise, the move kind of becomes what we call invalid. It doesn't make sense. It's not telling you anything that you couldn't just guess by a flip of a coin. All right. So that's what we're essentially talking about here. Interesting stuff. Hopefully, it didn't, scare you off for, again, those people that have been asking me the questions, but it gives you a kind of an idea. So just looking at those news stories and saying, okay, this has happened, so we think it's going to go up, or this has happened, so we think it's going to go down. Sometimes you're missing a lot of what is out there, what is really driving the price. Okay, so ignore technical analysis at your peril, because all of a sudden things will happen in the market. And if I asked you why, you'd be hard pushed to explain, what the rationale was. It could be just down to the fact we've hit resistance, we've hit support, all of those kind of things. So hopefully you're going to get an idea with these conversations as we carry on talking about them as we move further. So another question that came up for me, Nick, is a conversation about dominance. So how dominant a particular instrument is within its marketplace, if you will. So we'll carry on the conversation about cryptos.
Yeah.
The crypto assets, the crypto, currencies, let's say, the market capitalization, if I'm right in saying this, Nick, you'll correct me, but the market capitalization, again, just pausing, just for those people, I don't want to leave anyone behind. This is called the Academy. We want to keep everyone on board here, not just dealing with everyone that knows the stuff already. So I want to bring everyone onto the boat. When we talk about market capitalization, we're just talking about the overall value of something within within a market. So if we were looking at, for example, the market cap of Apple. So you pick a company like Apple. All we're dealing with market capitalization, it's just the number of units they've issued, number of shares they've issued, multiplied by their current price. Now, the actual amount of issuance tends to stay relatively static, but of course the price is constantly moving. So your market caps are constantly moving. So we're just talking about the overall value. In theory, what it would cost you, and it very much is theoretical, it's not reality. In theory, what it would cost you to buy Apple when you look at its market cap. And again, that's just absolute theoretical number. That's all it is. All right. Now, with the cryptocurrencies, the overall, I believe, the market cap on the crypto market is $2.7 trillion. I think I'm right in saying that, Nick.
It's a bit higher now. That's it's about, I think it was about 3.5 the last time I looked, but it's easy to check because on your, let's just put that up, and 3.57 trillion.
Right. So that's going to be based. That's how that market cap's changed, obviously over the recent price movement. So my numbers are outdated. When were we 2.7?
Probably a long time ago. Probably before the election, I would suggest.
Okay. All right. So
that was because I don't I just took that off. But yeah, I mean the market has moved up a little bit here. 2.7, we were around about election time.
Yeah, so that just before the blip up, and that shows you how, of course, your market capitalization changes. So yeah, 3.5. I've corrected my numbers. Told you I wasn't an expert on cryptos, but there you go.
Bitcoin is about 60% of the market capitalization. It's 59%, something like that. The recent peak on Bitcoin, for all those Fibonacci fans out there, was 61.4, very close to the 61.8% Fibonacci number. And again, you see that these Fibonacci numbers themselves act as support and resistance, as opposed to it being a Fibonacci line or anything, or retracement or anything. It was actually the percent of the entire crypto market. The Bitcoin itself paused at that level. It's important for Bitcoin to pause at that level, in my view, because there are two paths for the crypto market. And one is, it's all about Bitcoin. So the all of the sort of the Bitcoin enthusiasts out there who think that all of this alt stuff is just crazy and they don't count and it all goes zero and there is only Bitcoin. So when you see Bitcoin starting to peak in its dominance, it means that institutional money. So you've got total market cap going up, but you've got money coming in to not just Bitcoin, but also these other instruments. And as I say, Bitcoin in itself doesn't do very much. Okay. So it's an asset, store of value and all of this thing. But today you can't program Bitcoin. You can't, so it doesn't act as a, proper electronic, doesn't have an obvious use case. And I'm sure that, people are linking sort of these chains to Bitcoin so that you can Bitcoin from a program from another chain. But the point being that all of these other cryptos, thousands of cryptos, they all have some use or other. And XRP has its specialty in, cross-border payments. And therefore, it is something that the banks are, very keen to be involved with. Now, when Trump signed his crypto law yesterday, he talked about a crypto a working group. He didn't say a Bitcoin working group. He talked about sort of stockpiling crypto. He didn't talk about stockpiling Bitcoin. So, there is still, the belief that there is a good future for these other instruments. Some of them are just going to be speculative, gambling, all of this stuff, and some of them are still the meme coins. So the Trump coin, which came out the other day, we were asked one of the questions from one of the viewers in my last video about, what about the Trump coin? That's really interesting. It's a coin. It doesn't do anything. So it's a meme coin. Okay, it's like when I was growing up, we had these little stickers of footballers. They were, where you were a fan of this football club or that particular player or whatever. And obviously some money has gone into the Trump coin, which overnight, I think, reached a market cap of 70 billion. I mean, that would have been the fastest 70 billion Donald Trump has ever made or likely to make again. So the market quickly fell back as Melania had her own sort of meme coin issued. So there are coins which don't do stuff, that they are just there, to show your support and the price moves up and down. But there are other coins where people are active in them because they believe in the, what the actual platform is doing and the role it plays in finance, or it will play in the future. And as I say, XRP is one of the ones which there is a lot of hope in the financial community about the use of this thing. But if you can see my screen, Harry, this is the dominance of XRP in its history. So, this thing in 2017, when we had that high in price of 3.19, that was when, according to this data, XRP was 30% of the market. That's phenomenal. So there was Bitcoin at that time, there was Ethereum, there was XRP. I mean, Ethereum must have been sort of relatively tiny. And now, with the same price, XRP is only 5% of the total crypto market. So it's technically, it's got a new high here. We want to see it go above this high, which is above 6% of the market, to continue to show, further development, and perhaps that further money is going through. You can put some Fibonacci things here and say, well, where's the likely resistance? But of course, as other coins are beginning to sort of play a role in the financial world, then it's more difficult to, for one particular cryptocurrency to be the dominant thing at the moment, other than Bitcoin. Yeah, Bitcoin, as I say, is the big daddy of them all. But we want to see, if we are altcoin believers, that this new catalyst that's taken place since the Trump has come in, to be the tailwind for a story in crypto, and most likely this will provide more tailwind for the altcoin market if they start to deliver things that they promise, as opposed to having roadmaps for their future, but they're still years away from doing anything significant. But as I say, we're at 5% now for Ripple. It's the third largest crypto in the community. To put it into context, let me just overlay Ethereum. So this is the Ethereum dominance chart, and you can see our faces. Can you see this, Harry,
I can,
clearly?
yeah, yeah.
Okay, good. So this red line, which you're seeing, um, Ethereum has, since 2020, late 2023, fallen in dominance um, to the other cryptos. Now, what does that mean? So all of the money that was, piling into Ethereum from the initial backers, and a lot of these cryptos are backed by VCs. There are some that aren't, like Cardano, but those which are sort of backed by VCs, it looks like they've been shifting their sort of focus to other coins, Cardano, Solana, XRP, etc., because you now have a dominance of Ethereum, which is now 11%, which, at this, let's just say a few months ago, was 20% of the market. So Ethereum is clearly not benefiting from the, how should we say, the new environment for, or people don't expect it to benefit from this new catalyst of, clear legislation. It's kind of reached its peak. I think that's the thought process here. It got to 20%. Well, if the world is going to be driven by Ethereum, then I ain't going to go very far in the crypto world. So people are starting to put bets on, as I say, to the other coins, which are, going to show some promise. And that's the kind of thing I guess you want to watch. You want to watch this dominance thing, because it will tell you whether your coin, it's not just a case of number go up. Well, number go up, but is it becoming more or less a part of the crypto world? So, I always try to, when people ask me a question, I try to sort of make sure that they've got some basic, you know, that they look at the right things and not just the price, because I think they, as I say, this is part of a portfolio, and portfolio means opportunity, either made or lost. So put things into perspective. And as I say, what's happened, the clear winner has been XRP. Cardano's moved up very sharply against some of these things, but it's still only 1%, still relatively tiny part of the crypto world. Anyway, I'll pause there. Any
No,
other
that's
questions,
I mean,
Harry, that you get?
yeah, that, so dominance in a nutshell, that was something that was discussed. People didn't really understand it. Hopefully there's a better understanding here. And we're obviously, bringing everything to the party. We're bringing all the pieces of the jigsaw together, hopefully. And it gives, people that are unfamiliar with these things a better idea of what to expect. Now, you've mentioned, Nick, portfolios several times. And of course, that's what this world is all about, because, you know, I've learned this to my detriment for many, many years. I still learn it to these days. You're not always going to get it right. The world of investing, the world of trading, let's stay with the world of trading, perhaps more so. The world of trading, you're not always going to get it right. You're looking for those high probability trades to hopefully pay off, but you are going to have some losers, and you've got to expect that. Now, that's why we think about portfolios. The problem you have, and the problem you can have, is if you're exclusively concentrated in one asset. Like we're talking about Ripple here, and there are lots of people out there that have put the whole thing on Ripple. That's the danger, because that's going to change your approach and your strategies. Because we go back to that point. We said, oh, we're up a high. You could expect some selling here. If all you're involved in is Ripple, uh, you're going to have to ride out those ups and downs, and sometimes it's going to hurt, and it's going to hurt badly. So, if you have a portfolio, you'd be thinking about adjusting at this point, because again, that's the more likely, the higher probability. You'd think about, okay, it's now reached a point where people may be more likely to sell. So why don't I just lighten up the load and go into something else? Let me go and invest in Google. Let me go and invest in Apple and all of these things. You know,
Or a different crypto.
or
I
a
mean,
different crypto.
yeah, I
Absolutely.
mean, just on that, and there are those people who are also only investing in Bitcoin, and I understand that why they do that. And when you're monitoring the kind of the dominance of Bitcoin in this thing, and this is just the chart from near period of time. But if you look at where it's coming from, Bitcoin also had obviously the major role to play. It was in 2021, it was 73%. And it's clear that obviously when the game started, Bitcoin was 100% of this thing. But what's happening now, of course, is as potentially money is being encouraged to come into these altcoins, is that the dominance of Bitcoin, perhaps isn't running away. And since 2022 low, which was the low for stock markets, the low for liquidity, we know all of that stuff. The market in Bitcoin dominance has gone up, peaked at this, as I say, 61.42. And I'm sure if I sort of really hover my cursor here, I'm sure I can find anyway, maybe it's not, maybe that's a Fibonacci number, as near as damn it. And then we went down and we went up. And if you look, we are just below this trend line. Now, does this mean that there's a potential risk of a rejection of the trend line and that the Bitcoin dominance will, drop, let's just say, into the 50s? What would that mean? That would mean that, part of the analysis that I've done on Bitcoin says target somewhere between 115 and 150 for this cycle. Okay, so it gets at 115, 125, 130, something like this. That's like 10% higher, isn't it? 15% higher. Well, maybe the bigger gain is in some of these other altcoins. If we are still in this upswing for the crypto market, an upcycle and getting tailwind from the cycle, and you'll start to see other, these other Mag 7s equivalent of cryptos taking a bigger role, at least until the crypto sort of peaks in its cycle, and then we have an 18-month or 20-month period of it all goes sideways or downwards. But let's just say Bitcoin peaks at 115 whilst other things are going up, then you would expect that the Bitcoin dominance to fall whilst the overall market cap, which is what this blue line was about, the overall market cap of crypto, we would expect, or we would think, that this thing should go higher, especially if institutions get the stamp of approval of the regulator in the US saying there's nothing wrong with this stuff, you can put it on your books. And then you get the banks starting to allow payments in crypto, not just Bitcoin, but let's just say the top 5 or something like this. And then this thing gets a new lease of life, a new cycle, if you like, for crypto, and then you get this different kind of belief system in the price. So I wanted to finish off at least the dominance thing with the Bitcoin chart, because I think it is the indicator. At the moment, everything is under the shadow of Bitcoin. Whilst the dominance of Bitcoin goes up, it will be that way. But when the dominance of Bitcoin starts to fall, then other instruments will start to get their own life.
Yeah. That makes, that to me makes perfect sense. Thanks for that. Incidentally, again, Fibonacci levels, Fibonacci points, all of these things we discuss further on the Academy. If you're interested, and you should be interested, if you know about the stuff, you know how these patterns form. Fibonacci levels, if you don't know it, it's present in every walk of life, not just finance, in the natural world. From facial features to the way buildings are constructed to just everything in nature. It's unbelievable. It's freaky. It's spooky. If you don't know it and you start getting into it, you suddenly realize, oh my God. So these patterns do form. Let's leave it there. We'll have that discussion further down the line. But again, just going to those questions that keep being asked of me, I think we've covered a lot of the points. One of the last areas as we just get towards the end, I know it's going to be a brief discussion. It's probably gone on a bit longer than we wanted.
Yeah.
As always, we always say quick 5 minutes, and it ends up being probably about 3 hours. But let's get closer to our quick 5 minutes here, the end of our quick 5 minutes. Just another question, the last one I put up there. Someone looked at the recent price movement and went, that's because Jamie Dimon, that's the CEO of JP Morgan Chase, he likes it. He likes Ripple. Okay, pause. Where did that come from? Because, recent articles, I was looking at one, a very recent article. I'm just going to read it to you rather than sort of tell you where to get it. Just a quick discussion. It made me laugh. But this is as of the 13th of January, so not so long ago. Jamie Dimon, again, the CEO of JP Morgan Chase, attacked Bitcoin, describing it as a Ponzi scheme. So you know about Ponzi schemes, and dismissing it as useless as a pet rock. Okay, so that's what he's come out with officially in terms of, yeah, okay, we can read behind the scenes. I'm not going to get political here at all. But yeah, that's what he said on CBS News, those kind of conversations. So people are saying the price has moved because, oh, Jamie Dimon likes it. Doesn't sound like it. Okay, but hold on. Let's bring some reality to the story. He might not be that fond of it, this being Bitcoin in particular. But it seems that JP Morgan are involved. Would I be right in saying that, Nick?
Absolutely. I mean, Jamie Dimon obviously doesn't need to buy Bitcoin to make money because he gets, I think he just got a check for 39 million yesterday for his efforts. The guy is close to a billionaire for doing a good job running one of the biggest banks in the world. So as long as his bank's making money, he's a happy chappy. And JP Morgan are very, very much into the crypto world. I think they've supported a number of crypto or blockchain projects. If you Google, and this came across my desk a week or so ago, it was Project Guardian from JP Morgan, and I thought I've got to look at this stuff because it was relevant for payments, and it was relevant and therefore potentially XRP. And then I came across this thing where they've actually incorporated it in either a future model or a current model, and I honestly don't know what it is, in their wealth management platform. There is a video on their website that will, as a former asset manager, this is wow. Okay, this is the future. This basically it gives you a feature of a relationship officer to a wealth management client, and then it's all machine organized over blockchain, over artificial intelligence, or using AI, plus over the blockchain. The blockchain they use is their own. It's not one of the sort of the regular chains. Project it's Onyx, which has also received a boost in the last few days. I looked at it this morning. This Onyx is worth 700 million already. So from very little, these things are receiving attention because it's a real life solution using blockchain, using AI in the real world, and this potentially challenges the whole asset management industry. And blockchain, as we looked at the evolution of AI, we're looking at the evolution of blockchain as potentially challenging traditional business models. So where there are trusted intermediaries today who are getting their piece of the pie, whether it's Meta, whether it's Amazon, whether it's whatever, blockchains have the capability to play a bigger role as an intermediary. And it's clear, you know, Project Gardener is just sort of scratching the surface. If these things get some kind of traction, then you know, these things are going to be extraordinarily big and important, and it will lessen the role of those asset managers or other intermediaries who are kind of, you know, still following their own model. So you know, the technology revolution is with us. The blockchain is part of it. We haven't heard much of it under, you know, Gary Gensler's leadership, but obviously with the new sheriffs pushing this thing forward in America, you know, this could still transform many industries, and therefore the fantasy of what this thing can do is there. We now have to match fantasy with real life. What does it mean in terms of value, price, etc., in our analysis? But you know, I think we're in a kind of a new world.
Yeah, absolutely, absolutely. It's
So
so
don't look at what Jamie Dimon says, rather look at what he does.
yeah. And again, just to kind of to give him a little bit of defense as well.
You
Maybe he
don't
doesn't
need to
like the
defend Jamie
pet rock,
Dimon.
but maybe he doesn't like the pet rock, but he likes the technology behind the pet rock. I
He
think,
likes the money that they can make with it,
of course.
and they've clearly made a lot of money with it. JP Morgan, you know, this is you know, one of their many ventures and stuff like this. So, but it's clearly something that has a lot of promise. I honestly don't know what phase they're in their development, whether it is just you know, the ideas they have today, and they still need to transition them into reality. But the ideas are absolutely amazing, and you know, all credit to them for, you know, being the, you know, the organization or one of many that are looking forward to, you know, transform their business, which is the most fundamental thing right now. I mean, you can't sleep. You have to be always looking what you could do better.
Absolutely, and they are authorized participants in ETFs as well, involving cryptos. So yeah, you know, but that's quite rightly as you say, that's where the money is. So an interesting point to finish up on, I hope, for everyone listening and everyone that's asked the questions. Hopefully, we've answered some of those questions or all of them to a certain extent. But I'll summarize by saying that, you know, you've got to be so careful with these things. News stories aside, you know, watching a sudden leap up in the price movement, and some people that got in at lower levels, and some people are jumping in. You know, the fear of missing out, FOMO, as we like to say. There's so much of a story that you still need to read. It's not just that one headline. It's not just, oh, it's done this because of that, because you're going to be disappointed. You're going to be disappointed a lot if it's just like that flip of the coin trade. There's a lot more things to bring into your conversation, your thought process, if you want to take this thing seriously. If it's just playing the lottery, then fine. Okay, then where the losses as well as the, you know, hopefully nice little gains. But I think, as we have just briefly mentioned, there's a lot more to it. A lot more to it. And we will talk a lot more about these things. Certainly, the last conversation Nick was just saying there about AI, we've been talking about that a lot. But yeah, I think hopefully this has answered just a few of those questions. So, anything to conclude with, Nick?
Yeah, I mean, I watched a video yesterday from my mate Torsten, and he interviewed a chap called Dr. Achim Illner, and I thought I was sort of, you know, fairly optimistic about the crypto world. I think he's very optimistic about the Bitcoin world. I didn't hear much about the crypto world, but he had a few charts in there, and I don't know if they are charts from Michael Saylor, who is a sort of Bitcoin purist, which looked at the market cap. So if you think of where is crypto in the world of the asset community, so gold is 18 trillion today, and Bitcoin, sorry, crypto is about 3.5 trillion, we said. So you can see the relationship is crypto is still the baby brother of gold. But you know, the vision is that crypto is going to far exceed the value of gold. It's not my view necessarily, but you know, it gives you food for thought. So if you're a German speaker watch that video because it certainly opened my eyes about the potential that people can see in this sector. So the potential is potentially great. It's much bigger than I sort of envisaged in a relatively short space of time. So I think he was talking about 20 years or so. But anyway, so watch that. That's my kind of final word. And watch these videos as we, use this Friday. As I say, Harry and I talk daily, and then we're just going to turn the machine on a Friday. If there is something that is particularly, coming across his desk or my desk, and if there's an overlap, we'll sort of record something like this. Hope you enjoyed it.
Good. Yeah, thanks for that, Nick. And yeah, we'll talk again tomorrow, Nick. But everyone else, hopefully, we'll see you in about a week's time. If you have any questions, fire them into us. You know where to reach us, and we'll see you soon. Take care.
See you soon. Ciao.